Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Global Alts Miami by iConnections. Joining me to discuss how investment in the digital asset space continues to evolve as as a venture allocation is Drew Myers, Managing Partner at Crosslayer Capital. Drew, it's great to have you with us, and it's interesting to see how the conversation overall with digital assets has evolved. Certainly, for 2024 to where we are now as part of the national conversation. How have you seen it from your perspective in terms of institutional engagement and what that particular area of the market is looking for when they think about allocations?
Yeah, absolutely. Well, thanks for having me on. I guess the first thing is a lot of allocators are thinking about the space within their venture portfolio. Mm-hmm. So, a lot of people are already investing in venture. Most traditional venture managers aren't investing in the space, and there's a whole new cohort of managers dedicated to the crypto space that have kind of emerged over the last 5+ years. And what we've seen more recently is, especially with the kind of changing election and what's become a much more favorable regulatory environment for the crypto space, is there's a lot more interest. And we've seen kind of a night and day change from several years ago where I think the space was under a lot of pressure. And now I think people really see that there's the long-term opportunity here in kind of many different categories of the crypto space.
Yeah, and we were talking about this off camera. When you think very US-centric, you think about more value. But other areas of the world, billions of people have adopted it as a form of capital formation. The capital markets are evolving in very different ways. It's cross-border payment, forms of commerce, growing local microeconomies. You don't want to lose that leader position within the global capital markets. So I think there really is an incentive for framework to evolve from this.
Yeah, no, absolutely. Trump has said he wants to make the U.S. like the crypto capital of the world. But I think to your point about the rest of the globe, one of the areas where we've seen a lot of adoption is in stable coins. There's about 200 billion in circulation today. And a lot of the demand has actually been people in emerging markets that want to hold dollars, frankly. And it's the easiest dollars they can access. They can use it for commerce or trade or paying people. And we expect, especially as we likely get a bill passed for stablecoins that haven't federally regulated in the U.S., that you're going to see a lot more companies start to use them for cross-border payments. And it would be a huge unlock for the space.
Well, this is all contingent on the execution of the policy formation.
Yes.
And that's not just specific to Trump, that's any administration. It's one thing to talk about it and get it off the starting line, but the execution of what the final product looks like is key here, I think.
Yeah, well, there's two sides. There's the regulatory agencies like the SEC and FDIC. We've already seen a change, like SAB 121, which was a bill that prevented banks and custodians from custodying digital assets. That's been repealed already. And I think one of the other challenges has been that a lot of companies can't even open a bank account, which has been a real challenge. And because the FDIC was putting pressure on banks not to bank crypto companies. And so I think we've already seen kind of an immediate change there. I think you're right in terms of what's less clear is there's a couple bills, one on stablecoins, one on market structure, that are very important for giving regulatory clarity for the space. And we believe there's support now within Congress to get these bills done, but the final version of these bills and the timing of that is still unclear. But it's looking very good in terms of that happening in the near future.
It's encouraging to hear that fostering innovation is a key priority. Within global alts itself and digital assets is a subsector of that. You had mentioned that it's increasingly, when they think about venture allocations, digital assets is moving into the forefront. What's attractive about it? What differentiates that subsector relative to other areas within the venture space?
Well, I think many allocators look at just the returns of the space, and the vintage year returns have been extraordinary, so a lot of allocators have actually just made a lot of money in the space. But I think in terms of why it's exciting, what the opportunity is today, is it's largely about a new technology that we have several theses on them, but one of them being that most of the financial system over time will go on chain, and it really kind of would be a massive shift in how assets are moved around, how value is captured. We're starting to see signs of it already with stablecoins, and I think people are realizing like, it's a innovation that in a trend that's not being captured by the traditional venture portfolio, where AI and a lot of other categories, most of their existing portfolios capture very nicely. But for the crypto space, it's sort of evolved as a separate cohort within their portfolio. I think of it more akin to biotech, where if you want biotech exposure, you needed to go find people that were dedicated, that were experts in the space. And I think the same thing is true, within crypto.
Because it feels like a number of these alternative spaces are starting to get very crowded. So it feels as if the opportunity is more present with digital assets because you're just starting to see more money come into it.
Yeah, no, that's exactly right. I mean, there hasn't been a lot of capital over the last couple of years come in, and so it has certainly not been crowded. And I think now you're seeing that shift, and we'll see if if capital really ramps up here. But you certainly wouldn't call it a crowded space today.
So Crosslayer Capital, where do you fit within the ecosystem? What's unique about what you're doing within digital
we are a
assets?
fund of funds
Right.
focused on closed-end venture funds in the crypto space. And so we help institutions that don't have a person dedicated to the space or don't.
So you're like the biotech guy, but in the digital asset space.
Exactly, yeah. So we're just helping institutions get exposure to the best funds in the space. The other important element is there's some very large funds in the space, but there's now 300-400 funds in the venture space in crypto. And there's a lot of emerging managers, and we really believe in smaller funds and getting capital into earlier stage deals and securing more ownership. And we found that there's kind of nothing more attractive than a concentrated pre-seed portfolio, just from a risk-return profile. And so it's very hard to do that if you're, some allocators are picking one or two managers in the space. And one, is very hard to capture the opportunity set, and two, it's very hard to go into some of these emerging managers where we think the upside is significantly higher, but it's difficult to do if you're just doing one fund.
Plus you have the barrier to the incumbents, right? Or larger players within that space. It's kind of like once you have that brand recognition associated with it, it does raise somewhat of a barrier to entry to a certain extent.
In terms of the VC funds?
Right, like
sorry.
you said, you were advocating for smaller funds.
Yeah, and I mean, well, a lot of it is about, I think it's very difficult to, we're looking for like 5 and 10x returns, and it's very difficult to do that when you have hundreds of millions of dollars. Right. And one of the metrics, the way we think about it is like, okay, what's the likelihood you can return your fund off $1 billion exit? And like fund math that's very attractive is, if you can get a 1x return on your fund off that exit.
5-10 times on that would be an extraordinary number.
Yes. Yes. Historically the numbers have been very good for the space, and there's been. But they are. I think the way to think of it is most people in traditional venture are targeting a 3x, and most people see crypto as more risky and they demand a higher return. And in reality, like most VCs don't deliver a 3x net, but it's certainly like you wouldn't do venture for a 2x. It wouldn't make sense. And I think people want a premium to that within crypto because they see it as riskier. And so yeah, people are looking for pretty extraordinary returns. But historically, the industry's, done very well on those metrics.
All right, Drew, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Global Alts. I'm Jill Malandrino.